Broadcast. Welcome to the May 31st, last day of May, Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I am Zaner Ag Hedge Joe, and I'm here with...
I'm Dan Hussey.
Welcome, Dan. How's it going? We are testing out the remote version of this where you and I are not sitting in the same room, but it looks like we're set up pretty good. Carter's done a great job.
Working technology is an amazing thing, isn't it?
Beautiful day out there. Is it as nice in Wheaton as it is in beautiful downtown Chicago? I think you have less chance of getting killed.
Yeah, well, I don't know. It depends on, I guess, who I run into in the street, but definitely hitting 80 degrees here. It's quickly become a pool day, which is exciting for everyone. I know my wife had her last day of classes today. She's a high school teacher, so she grabbed her little one, and they're off to the pool already, getting summer started off right.
And what do you got going on? Idle Hands, Devil's Workshop.
Yeah. Well, we've been putting together this broadcast and wrapping up our day and what has been otherwise kind of a sad end to the week for markets. I know you'll get to that in a bit, but I mean, your typical Friday is what I'd like to, I guess, chalk it up to. It's to some extent.
Summertime Friday, huh? Kind of heavy, kind of quiet. Yeah, for sure. Absolutely. And so with that, I think we could jump right into the numbers maybe.
Sure.
This week, we've got just a few things to cover. We'll get this stuff out of the way, and then we'll get on with the actual news. How about we open with wheat? This week's Chicago Board of Trade wheat for July, we opened that market at 713. The high there was 720. Looks like the low was 673 and a quarter with a close of 679 and 3/4. We calculated that out to be down about 18 and 3/4, almost 20 cents on the week. Is that right?
That is right.
Estimated ADM estimates coming into today were that the funds were still short or maybe increasingly short 35,000 contracts of Chicago Board of Trade wheat.
Yeah. Seaman, I'd like to say that, top is in just based off of price action alone type of thing, but man, the funds are still long, and typically short. Excuse me. We would typically expect them to be flipping long if that were the case, but yet here we are.
Seem to be bumping into, and there is some talk that you have hit kind of a seasonal high here, and an inability. So what we saw was 720, real nice move to that high, and then almost an immediate. In that same session from night to day, almost an immediate turnaround with a close for the week at 679 and 3/4. Not a tremendous technical look.
No, and I don't look at the 200 week moving average all too often, but just because we were looking at a chart of this a minute ago, getting our weekly numbers down, we ran right into the 200 week moving average as resistance this week, which is up there around 723. So just an interesting. I guess technical I don't pay attention to that happens to be where the highs on the chart are. Chalk it up with a grain of salt, but hey, something worth a conversation, right?
Ran smack dab into the 200 week moving average, merely derived, some of our favorite technicians would say, but looks like there was something there. For corn, for July, we opened at 467 this week. The high was 471. Low 445 and a half with a close at 445 and 3/4. That's down 19 on the week. And if our three listeners can imagine, or if they happen to be looking at a corn chart, what you've got there, estimated that the funds coming into the day short about 140,000 contracts in corn, but dueling technical patterns here. So obviously rather brutal outside week down. Versus a weekly flagging pattern. If you pull up that weekly chart, looks sort of consolidative, in that there is still the possibility that you jump out over the top of that. I'm not prone to looking much like 200 week moving averages. I'm not too prone to looking at consolidated patterns on a weekly chart. But what you do have there is a rather glaring daily head and shoulders pattern that appears to be working its way down below the neckline on that pattern, and talk about not a great technical look. And later on in the podcast, we're going to get to what might be contributing to that a little bit. It was this SAF story. You and I have spent a lot of time talking about it, and we'll get to that in just a couple minutes. Beans, did you see anything there technically that you think, any moving averages or anything that caught your eye in corn? I don't want to jump ahead if you've got something to point out.
Actually, just real quick. I mean, we're below all of our major moving averages, right? We all know the 200-day was unobtained by corn in this entire run up to the upside, at least in July corn. It was rejected at that 200-day on a few tests to try to get above it on the December chart for new crop. But we fell below earlier this week that 18-day moving average. We came back down to test the 100 and the 55-day yesterday. It kind of looked like we were now starting to break below it. And today we unfortunately held that 200 or the 155-day, which are right there with each other. Almost gave us a golden crossover, but have not crossed right around that 452 area. That was resistance today. Not a great look for the uptrend in terms of the moving averages and what corn's doing. But we did close the day and hold right on that trend line support for corn, giving you, at least some glimmer of hope that there could be some support here. But like you said, you've got this battle over the weekly and the daily time frames right now. And quite frankly, we'll look at some news later that could be contributing to that.
And so if we want to employ our least favorite marketing technique, the hope algorithm, maybe there is some chance there that we'll hold those moving averages and we'll see some sort of bounce off of these. I don't know what kind of odds we can lay on that, but I suppose we'll have to show up Sunday night and see how that goes.
Absolutely.
For beans, we opened the week 12.50 and a quarter. High was 12.54 and 3/4. Low 12.02 and 3/4 with a close of 12.05. That's down a whopping 43, almost 50 cents. Maybe more than 50 cents off the high. Weekly high here for this week was 12.54 and 3/4. And speaking of not great looks, last week's high 12.58 and a quarter. So we were not able to even test last week's high. Funds are short about 30,000 beans. I thought the ADM morning estimate was, and that's again more than a 50-cent fall from the highs there, huh?
Yeah, and you got to wonder how much that's been, these shorts have been added to. We'll see the number that was taken out today. Was it taken on Tuesday with the holiday, or was it taken Wednesday for this week? I'm not sure, but the snapshot from the CFTC.
Good question.
Good for us to go and figure that out. But point being is that we'll get an estimate from the CFTC where we were just a few days ago and a little higher. So, you have to assume that the selling pressure of the last couple of days have only added to that short, right? I don't see any reason why there'd be shorts covering here when there's technical indicators suggesting maybe you should be selling now that you're back below the 18-day moving average for corn or beans as well. And like the corn,
held some longer term moving averages, huh? Yeah.
The 100-day and 55-day, unlike the corn holding its trend line. We came right into that 1205 area where that 55-day and 100-day, it looked like it wanted to give us that bullish crossover, which would be a great, technical signal. But I will point out, we did close and hold above that 1203.75 low from 2 weeks ago. That it was otherwise the intermediary low after that initial run up to start the month of May. The first week of May was very bullish. We went to the highs of the month right away, tagged up to 12.58, and then pulled all the way back down to 12.03. Nothing's really changed since then. We have been inside of this $12 to $12.60 range in July beans for all intents and purposes. And the chart's a little cleaner than corn in terms of hope, I would say. But, because it's above those moving averages, above that breakout area, and it does look like we ratcheted the range up a little bit. But, it's getting really hard and long in the tooth to continue to hope on these markets rallying. But we did, close at a point today where it kind of held some key levels that if we were below, I don't think I would be willing to say these things right now. But again, 18-day moving average was resistance today. Kind of like the 100-day and 55-day was for corn. It's not a great look for the bulls or for those that are looking for this market to push higher another time.
Certainly forces us to show back up next week and find out, doesn't it?
Yes, absolutely.
In bean oil, we opened the week at 45.01. The high was 46.53. Low was 44.91. Looks like the last trade was 45.44. That was up 49 on the week, but rather muted. We really didn't cover a lot of ground in wheat this week. Funds short 56,000 contracts. And that looked, when I glanced at that weekly chart, that's what struck me, is that we really are not really not big moves there in the bean oil this week, but still short 56,000 contracts. And if they're going to keep coming for that, maybe we're going to start to travel some ground. For meal, we opened the week at 387, July meal 387, the high 391.30, low 362.30, closed 364.90. That was down a whopping 21.60, another outside week down. But here, and this is why I saved this one for last in the grain room, funds are long, an estimated 99,000 contracts by our friends at ADM. That's a big number.
Yeah, and the one place where we're actually long, right, in the fund category, in the row majors, in the row crops, in the bean complex as well. Kind of a weird thing. I mean, I guess you could attribute to that run up in early May where they really started to build into it. Now they're getting squeezed a little bit, but as Ted would say, and as we like to adhere to on our desk, bean-driven rally should be driven by the meal. When it's a very real thing. Back below its 200-day moving average for the week, below that 18-day and 200-day, which are right around 372, and we're kind of resistance there yesterday. Lean meal looks like it could be in a pullback to test that 55 and 100-day. The one shining star here, though, in the row crops is we did get that bullish crossover of the 55 and 100-day there 2 days ago in the bean meal. Would be a head fake. It's the only place we've seen that. And typically speaking, when you see a crossover like that, there's usually, in my opinion, I've seen markets have a little bit of a reversion to the mean anyway, because the technical signal pops off for speculators to buy. And sometimes there's a little bit of a squeeze on that buying pressure. But seeing the funds long makes you really curious, because if we're going to go $13 in soybeans and meal's going to go to $4, well, that means they've got to get longer in the soybean in the meal to cover out of that bean short. It's kind of a weird dichotomy that we can't really straighten out. It's one of the weird, maybe I don't know, maybe it's the canary in the coal mine here that a top could be in too. We can't, if we're going to be fair and play devil's advocate.
Other side of the coin on that is if we do not get some traction in the rest of these ag markets, and this fund long is at 99,000, that starts to get heavier and heavier every day. And so we'll have to wait and see how that plays out.
And
how about cattle? Go ahead.
Yeah,
go ahead.
And I was going to say we're not covering this story right now, but I did see reports of China starting to export meal here. So kind of a weird, in direct competition with Argentina, mind you, but it seems to be a surplus of the crush in China, and leading to them to dump some soy meal on the international market. That's a developing story that we'll probably have a lot more to say about next week as some clarity comes to the situation.
As they buy a bunch of beans from the Pacific Northwest.
You're right. I like to knock on wood, or kind of say it tongue in cheek, because we know that they have a history of liking to move the needle in the markets that they want to participate in the most. And if it means they're selling some meal to drive down soy prices to only gobble it up again, well, that could be.
Not like we haven't seen that before.
Could be, as China does, right? I mean,
for sure.
What can you say?
How about cattle? We opened the week 183.77 and a half. The high there, 183.77 and a half open on June cattle. High 184.62 and a half, low 181.17 and a half, with a close of 181.60. That's down 210 on the week. Maybe, and so here again, kind of dueling patterns or dueling ideas that, okay, you've had cattle run up into what has been a really nice restocking period. The opening of the grilling season, a little bit of restocking coming post holidays. We've had some really nice weather in a lot of places when it stopped raining for 10 minutes.
And up to the levels where we initially saw the H1N1 bird flu story begin to hit the wires there right in March. And, we had a bit of a pullback, and we commented how the market has, kind of retraced up to there. And it did so certainly in this last run up. What was that? Like, I don't want to say it was 6 days in a row of green candles before we kind of got a little toppy.
Certainly bullish cattle on feed. Absolutely.
Right. Absolutely.
And bullish
markets
response.
don't. Right. And markets don't head in a straight line forever. pulling back now to test maybe that 18-day around 180 in the June cattle. That 18-day moving average is actually where we found support today in the August cattle. And we've got a nice trend channel higher if the cattle want to continue since their leg up in March. I mean, there's no reason a healthy pullback here should be seen as, anything but a healthy pullback at this point. Can that all change? Of course, but a couple
Duck,
days down after a big run up is
duck,
not
so you don't
unexpected.
go ahead and duck so you don't get any of this cold water on you. August feeders opened the week at 261. High was 264.95. Low 255.80. And last trade I saw was 256.40. That is down 382 and a half on the week. And that feeder chart a little bit more difficult to make the feeders the leaders for anywhere but the downside. Even with that cattle on feed, I would say that I am surprised to see this level of weakness in the feeders, and it may speak to a number of other things, maybe broader economic implications with consumers. Feeders kind of sending a signal that maybe this consumer is spent up and lent up, and a lot of things to look at. But down 382 on the week, not a great look for feeders.
Yeah, and that broader economic look too. Outside markets like the S&P, Russell, Nasdaq, they were all down. We've been in a bit of a risk-off move for the last several days that correlate with this high in the feeders as well. Crude oil's been down, gold and silver are down. It seems a lot like a risk-off move into the end of the month as well. So we can have a broader kind of outside macro look there. Closed the day and below the 18-day and 55-day moving averages, which come in around the 157 area in the feeders. Not a good look, as Joe said, right? These are levels you'd expect to see them hold for support on that next run up to contract highs. If we're going to get really trendy and head higher, those levels have to hold as support. And today we gave them up, and that's not a good look into the close.
Not a great look. And
No.
with that, maybe we should begin. Let's begin. News stories for the week. I'll jump right in here. Senate leaders respond to House Ag Committee Farm Bill passage from Curry McCullough on RFT TV. House version of the Farm Bill has made it through a pivotal phase after passing the Ag Committee. We are now hearing from leaders on the Senate side. House Ag Chair G.T. Thompson says he will coordinate with the Senate and hopes to have a floor vote by September. As the process for a new farm bill gains momentum, bipartisan support emerges as crucial for its further progression, according to the American Farm Bureau Federation Government Affairs Director Joe Gilson. Gilson says history shows Farm Bill has always been a bipartisan effort, as it should be, bringing broad swaths of food and agriculture together. Farm Bill has always been done in a bipartisan basis with a coalition of nutrition, environmental, and farm commodity organizations and constituents from across the country supporting this, Gilson says. We need to keep that coalition together to get the bill across the finish line, and farmers and ranchers across the country need to see investments made in the farm safety net.
Yeah, I think it's pretty easy to say that there's not a political game going on, at least with the Farm Bill. This is something everybody wants to get done, seen it done, and everybody needs it done. Obviously in the future, in years in the future, we may be talking about other things like SAF and all of that stuff in there. But, for the time being, this seems like status quo and just two sides of the aisle coming together to get it done before the end of summer.
As they should. Least they could do.
Absolutely.
Yep.
Yeah, right. Right, we can give them something. So, got some international stories that have been hitting the wheat market, specifically some sanctions that the EU has imposed on Russia, some prohibitive tariffs on Russian and Belarusian grain. It's all grain, but let's face it, it's really a very wheat-centric type story anyway. European Trade Union ministers agreed on Thursday to impose prohibitive tariffs on cereals, oilseeds, and derived products from Russia and Belarus starting July 1, a move that the bloc said would halt imports of these products into the EU. The tariffs will be 95 euros or $102.76 as of our last currency market swap close. Ton for cereals and 50% for oilseeds. Tariffs will also apply to beet pulp, pellets, and dried peas. The minister's decision follows a proposal from the European Commission on March 22nd, and the finance minister of Belgium said, who holds the rotating presidency for the EU right now, says that these measures will therefore prevent the destabilization of the EU's grain market and halt Russia's export of illegally appropriated grain produced in the territories of Ukraine, and prevent Russia from using those revenues and from exports of the EU to fund its war aggression. The commission said that there is a risk that imports could increase given, and this is assuming from other nations because they're going to have to meet demand somewhere in the international market, right? Given Russia overall wheat exports had risen 50 million tons from the usual 35 million tons, EU minister said the increase in customs duties would not harm global food security as it would not affect the transit of the products through the EU territory to third party countries. Uh, Interesting. But if the
Interesting.
EU is turning around and trying to the sale of grain across Europe, India, on the other side of the globe, is now removing wheat import tariffs after a 6-year gap to replenish its depleted reserves and hold down prices that leapt forward 3 years ago after a disappointing crop. This is a continually developing story of how India has moved from a massive net exporter of agricultural products historically to the last 4 years becoming a net importer, which goes
Indians
to show
need
you
some
when
wheat.
absolutely, when you start to push those thresholds of 1 billion people and mouths you have to feed in what is primarily a vegetarian culture, they can't do it themselves, and their food stability becomes a question. New Delhi is expected to abandon the 40% tax on wheat imports this year, and officials and other sources told Reuters that paving the way for private traders and flour millers to buy from producers such as a top exporter, Russia, albeit in modest volumes. As the new season wheat harvest rolls in, the government is likely to wait until after June to scrap the import tax, and just in time for the Russian harvest. So you've got the EU trying to stop Russia from selling grain to the EU, and right across the world, on the other side of the world, we have India opening up their markets to effectively Russian wheat, and saying so very blatantly, and obviously to try to protect food security interests in India. But India has had no problem dealing with Russia for oil, gold, and now agricultural products too, even in the midst of this Ukrainian war.
If we paint this with a broad brush, I don't necessarily have a handle on what this means for Russian wheat and what this means for global wheat supplies. But it would seem to me that on its face, this shows that there will be increased competition for less Russian wheat. And these days,
Agreed.
with the Russian government running the entire export, almost the entire export of wheat now, I wonder, does this transit through, or does this bring an impact to U.S. wheat prices? It's a global market. Can we expect, or can we explore the possibility that this might continue, or this may keep the U.S. wheat futures market buoyant?
Better bid. Yeah. I mean, if you're thinking of the global balance sheet and production of wheat, if Russian wheat's not making its way to the EU and to other potential buyers, and India is coming in and gobbling up that market share, then it leaves the EU importer of wheat, or maybe other African countries and other places around the world, it leaves them having to turn to other markets to substantiate that demand. And well, the U.S. wheat market, certainly the way it's been priced globally, which I believe KC wheat is still at a discount to Russian or to French wheat, milling wheat, which at face value says you get a better deal coming to the U.S. and to buy our agricultural products. And I'd like to think that economics of supply and demand here would drive it that way. I mean, it should on paper, right? If things don't become political.
It's difficult for me to look at that wheat chart and not use the word precarious, right? We've had a very strong run up on this type of situation. Russian production challenges, certainly nothing to scoff at, but can we hold these prices here? Had a little bit of a pullback this week, and I suppose if we can hold here, that's going to be a great sign. But if we don't hold
and if
here,
there's a reason, if there's a reason to look for continued export demand or a reason to get excited about wheat, hey, you start to see those exports, we can kind of attribute why. So
and we did see some exports this week. Export
Absolutely
sales, we did see some rather broad-based business, I thought, for U.S. wheat. If I can, we'll jump to the next story. And this is a story that I have not really had. Of course, producer Carter, who does such a great job, has been very focused on this bird flu situation. I don't know if there's a lot of birds where he lives, or if he's just something that happened in his childhood. But every week he pushes this bird flu story on us, and some weeks we're like, we ain't talking about that. Some weeks we will talk about it. I guess this week we will talk about it. So for Carter,
some developments.
Yeah, some development, and not to make light, right? I mean, serious business. I mean, some folks have got pink eye. Just the humanitarian cost, to maybe some dairy workers that get pink eye and it lasts for 3 or 4 days. I don't want to make light of that, Dan. You know what I'm saying?
Right.
Guy gets pink eye. It itches, right? And your eyes are pink and people look at you and say, that's gross. So certainly can be serious. But Reuters, ongoing bird flu outbreak in the United States. H5N1 bird flu virus has spread to dairy cows in the United States. We know that. Raising concerns about its spread to humans. We also know that. Since 2022, bird flu in the U.S. has infected over 90 million chickens, more than 9,000 wild birds. How do they know that? 67 dairy herds, 1 person who was exposed to poultry, and 3 people who were in close contact with infected cattle, a third U.S. worker. So that's in 4 years, or 2 years, I'm sorry. A third U.S. dairy worker.
Up until yesterday.
Right. The third U.S. dairy worker tested positive for bird flu in 2024 after exposure to infected cows and was the first to suffer respiratory problems. The infection was the second human case in the state of Michigan. I saw, and I can't credit the news outlet today, I saw where they are saying that Michigan is going to begin testing workers that come in contact with cattle. Another reason maybe to talk about this.
Sure, and that could help, right? Not only the contact tracing and seeing if it truly is human to human spread at all, because that's
God bless them, right? Yeah, God bless them.
That's the fear here, is that we start to see human to human spread, and certainly the change over the last couple of weeks in the new case showing actual respiratory symptoms. I don't believe the person's in critical condition or anything like that, but it's not just an itchy eye. This person is getting has a cough associated with it, which may or may not mean the M word, mutation. But for the time being, there doesn't seem to be any human to human tracing or pathology here. So it's still an ongoing thing. Way too soon to, I think, panic. But I mean, maybe a reason we're a little heavier in the cattle. The last day or two. Got to at least acknowledge the fact that there is a development in this story. We'll see next week probably how much, the market really wants to digest that or not.
Now, we would be remiss if we did not discuss. Reuters came out with an article, and I don't have that in front of me, and I can't remember if you do or you don't, but we still got to talk about it, I think.
Absolutely.
Because not only because you and I used a tremendous amount of words discussing sustainable airline fuel and the impact and the perceptions and what we thought and what we wanted to say and what we didn't want to say. But now Reuters comes out with an article yesterday, and if I am paraphrasing this correctly, the article says very little ethanol in the United States will qualify for this sustainable airline fuel.
And I believe that's under the assumption of, like, just one, how it's currently worded, and two, what everybody's current practices are, right? Unless people change their practices and everything, the current production of ethanol in the U.S., nothing really qualifies, is what they're saying. In fact, the exact words were little to no ethanol will qualify for U.S. aviation fuel credit, according to Reuters News. And thus, for SAF and the subsidies under the new pilot program by Joe Biden's administration, which toughened climate requirements at the last minute. So there was a change here that they were hoping that they would ditch some of these requirements. At least it looked like we were going down that road for this pilot program, to where they're going to lessen or ditch the 3 farming methods, having to be the same, which was, sustainable. What is it called? Sustainable fertilizer application, cover cropping, right? And
what was the other one?
It's leading me off the top of my head, but
because it's Friday, we spent so much time talking about it. You think I'd have it tattooed on the inside of my eyelids?
No till.
That's right. So one of the things I saw in this article when I glanced at it real quick was somebody saying the quiet thing, which is, what if you're in Little Cedar, Iowa? What if you're in North Dakota? The cover crop thing doesn't exactly work.
Or no-till in certain periods of North Dakota where it's colder, right?
Exactly. And so what my thought was upon reading this initially, and I certainly don't have enough information yet, but my initial thought was, is this the government yet again picking winners and losers?
It
What
feels
I
right. It
shouldn't
feels a little like aimed right at certain markets that are going to benefit and others won't. And that's,
shouldn't
I
everybody
don't believe
have
it's
the
right.
same access? Shouldn't everybody have the same access to this if we're really going to do it as a country and it's the government that's bringing this down? But the other side of that coin was I saw a gentleman refer to this situation here as kind of, and again, I'm paraphrasing, as kind of a marker, right? Is that maybe the government's going to come back at this? And my question to you is, do you think that this is something that they could come back at before the election and say, hey, here's what we released in May, and here's what we're thinking about in July or August?
Yeah, you hope that things aren't getting political and things aren't going to be done here for political agendas and reasons. But we have an election year, and you can't ignore that fact, and that all of these appointees and people may have ties to administrations. And certainly the White House was set to ditch the requirement for all three farming methods to be used at the same time, but reversed after the Treasury Department officials said, Bunding, that the practices would boost compliance and increase environmental benefits. So the Treasury Department coming out of nowhere and making comments on agriculture that, in my place, stay in your lane.
What does that even mean? Do you know what I mean? So I get that they use two sentences there, but I don't have an understanding of what that even means, and I would be willing to bet $1 that they don't even understand. Not to get too political, I apologize,
Agreed.
but I'm beside myself because here we are. It looks like we're picking winners and losers yet again, and all the time. And it could be that I'm still slightly salty. We spent a significant amount of time at Commodity Classic out
learning about this from.
Well, before that, we spent a lot of time entertaining and drinking, doing very productive Commodity Classic things, and then to have to wake up early in the morning to go see these guys make the announcement, and then we're just sort of standing there with no announcement. I'm still salty about that. They have spent a lot of time looking at this. I have spent a lot of time waiting for it, and then they come out with something like this. That what's the point?
Rug pull. It's a rug pull on the entire program. I don't know how else to describe it. At the last minute, you ditch the idea that we're going to be opening up this and doing a test on it, and then all of a sudden making requirements that nobody can even get into the program for. That doesn't make sense to me.
In the hallway,
what's the purpose here?
In the hallway, we were standing right next to that gentleman from the EPA, and then, of course, Ag Secretary Vilsack. And, had I known that we'd be sitting here at this much time later in the future, maybe we would have stopped and turned and respectfully asked for a bit of an explanation. Yeah, we got a bit more of an explanation, because this is not, to me, this is not a very satisfying situation. And I'm looking out the window of an office in Chicago. Could you imagine if you were looking out at 5,000 acres of, do you know what I mean? It seems to me that they should be doing a bit better job at this.
And to give us a couple numbers here, the USDA does not collect data on how many farms are doing all three of the climate-friendly practices together, but some of the data does overlap. And they say that nationally, continuous no-till is only used at about 33% of the cropland. Efficient fertilizer is only used at about 26%, and cover crops are only over 6% of all of our acres. So, overlapping that 6% with the 26% and the 33% is how you get almost no one doing all of this, or can. And to your point earlier that we had Josh Gackel from a North Dakota farmer and head of the U.S. Soybean Association, said that cover crop requirement is particularly problematic in their region, as I know no-till is from what I've heard from my own farmers, that in North Dakota, it just doesn't make sense to do either one of those things at times. Where some of their peers in Iowa and Nebraska have completely different models for fertilizer application and other things. So even the farmers saw through this a long time ago, saying, "Hold up, this doesn't make sense. Not everybody can do all this, and certainly I have no implementation measures for some of it." So it's just a weird story. I hope they can proverbially get their act together in Washington and figure this out. And honestly, it's at the point where maybe we just need to start, not we, but farmers and nationally need to start being more vocal to that point, writing to your congressman, congresswoman, voicing your opinion on this matter, because that's where the rubber's going to hit the road, and hopefully making some of these changes.
Absolutely. That I think that covers all of our news stories, unless you've got something that maybe we didn't get to, or are we good?
No, I'm just happy to be done with the month of May, where June 1st is going to be right around the corner. And it's interesting to see where markets will be come next week, right? I know Carter's, I'm sure, got a question of the week for us to have some fun here into the end of the day. What do we got from Carter today?
Producer Carter, this may not be work safe, but I'm going to risk it. I don't know.
Baby.
Carter might be out over his skis. Dan, I just want you to conduct yourself with dignity here, as 3 people are going to watch this. All right, out on the internet.
Sir. Noted, sir.
Carter's question is, what is your favorite way to relax after a long day?
Well, that's easy for me, and I'm willing to bet we have the exact same. No, I'm willing to bet we have the same thing. It's interesting. After a long, hard day, I prefer to hop on a bike and go for an enjoyable ride. That's my Zen place. I know, Joe, you probably agree to some extent there.
I
as
do.
We're both cyclists.
Almost within arm's reach, I have a stack of Busch Light in the corn can here in the Zaner. In the Zaner Broadcasting Lounge, we do have a copious supply of Busch Light in the corn can, which would be a distant second. You're right. I really do enjoy getting on a bicycle and putting a couple miles in. So yeah, I think and not to be one of those guys, but I know that you are the same way. But if I can get some time in with my kids, my 2 children.
Oh, absolutely.
Hi guys, how you doing? Late teens.
2 of our 3 listeners, right?
Yeah, 2 of our 3 listeners. I have to wait 2 days to get a text back from my 2 teenagers. I'm sure every parents of teenagers are all suffering through the same thing. But if I could spend some time with the kids, if we're going to go out to dinner, or maybe we're going to go to the dunes, or spend a little time around a fire, then that's terrific too. But certainly, I agree with you. If we can get out on a bike and knock out some miles, that's a terrific way to do it. Good call.
Absolutely. Let's close this up here for the week. Thank you for listening to us here at Zaner Ag Hedge MarketCast. If you need anything more, you just can't get enough of us, you can follow us on Facebook at the Zaner Ag Hedge, or on Twitter and LinkedIn at the Zaner Group. If you have not already, check out our daily Ag Hedge hotline, where you can call in every day and get the daily agricultural commentary and updates from our one and only Ted Seifried, who you may have seen on RTV or Market to Market. The best part is it's completely free.
It's free.
That's
Sign up.
You can find the signups in the link provided. Thank you again, and be sure to like, comment, and give us a follow of the podcast to not miss a beat. And you will be back with you as price action develops. Take care, everyone.